All right. Well, thank you everybody for attending. I guess this is our fourth one. I think this is our fourth webinar we put on. So we're going to talk a little bit more about the FFCRA and the CARES Act. We're going to get a little bit more specific on how this relates to your Beyond Pay service. And then we'll of course leave some time for questions. Honestly, this is the main purpose of today is to give you guys a chance to ask questions. Honestly, everybody has very similar questions, so don't be shy. In fact, the people on this call likely have similar questions. So this also helps us identify what you guys are most curious about. What kind of things do we need to put together some better documentation? What do we need to try to find ways of automating? Development has basically been working uh, virtually 24/7 to incorporate all these different tax laws into the application. Most of them are done. Some of them are not, and we'll give some updates on that as well. So please ask your questions as we go. This will be a shorter discussion than in previous calls, but we will leave it open to the questions. And quite honestly, we'll just sit here and answer all the questions until you guys don't have any more. Just want to first thank everybody for your patience and consideration. This is a crazy time for everybody. Us, we're also affected by the coronavirus. And so I just want to thank all of our customers for your patience and consideration. Our team has been scrambling and running around trying to learn everything and figure out all these new rules. And I'm sure we've made a couple mistakes all the way. But at the same time, I know I've just been especially proud of our team who's really stepped up and kind of just taken over this process and been helping you guys. I know been helping you guys very well. So with that out of the way, we'll kind of continue in here. So Families First Coronavirus Response Act. If you have not yet watched any of our other webinars, I'd recommend watching the second webinar. Okay, that's probably the one that would probably be the most helpful. If you don't want to watch all of them, the second webinar would probably be the most helpful as we went through in some detail the different, both the CARES Act and the FFCRA. I'll also remind you that we have an FAQ page, and this, let me pull up our website for a second here. So if you go to beyondpay.com and click on COVID-19 FAQ, all right, this is a resource that you should bookmark, all right? So this is where we've been posting all of our information as we get it. I'll highlight a couple things. Number one, this link right here is an FAQ page right here, the very first questions and answers. If you haven't read this yet, please read it. There's about 79 questions there. If it's related to FFCRA, your question probably will be answered there. So if you haven't read that yet, I definitely recommend you read that if you have less than 500 employees. All right, the other thing I wanted to highlight front and center, and I'll probably mention this again, there are two documents that might require your attention. Okay, and again, we'll talk about this in a little bit more detail, but I just wanted to highlight this section right here. If you are going to take advantage of getting back credits for the FFCRA, actually this also applies for the employee retention credit, which we'll talk about, but Form 7200 is the form that you fill out. You send that to Beyond Pay. All right, you log into Workforce Ready and click on the feedback button. And after you fill out and sign this form, send it to us, and then we will send it to the IRS. We'll also track that information that you keyed in on it so that when we file your 941 at the end of the quarter, it incorporates any credits you receive back from the IRS. If you send this in without us knowing, your tax return will be wrong, and there could potentially be penalties, interest, and fees associated with that. So it's important that if you fill this out to send it to us, and then we'll file it for you. If for some reason you make a mistake and send it directly to the IRS, just give us a copy of it and let us know, hey, I already filed this, don't file it again. So that's important. The other thing here is we have a form if you want to take advantage of the FICA tax deferral under Section 2302. we ask that you click here and fill out this form. That's going to notify our tax team that you're going to take advantage of the tax deferral. We need to set this up in your account, and then we need to track it because it's all brand new, and we just need to put some processes in place for this. So many of you have already done this, but if you have not, then this is where you need to do that. And of course, you can always email support@beyondpay.com and we can help you out and answer these questions. I just wanted to highlight that front and center right at the beginning before we move on.
I also posted a couple of links in the chat for you to look at, so you guys can grab them before we get them updated on our website. Relatively new information. The first one is an IRS release clarifying FAQs about the deferral of employment tax deposits. And the other, for those of you in New Jersey, is an executive order by the New Jersey governor about deferring payments for certain insurance premiums. So that's something that you may want to take advantage of. It doesn't really involve Beyond Pay or directly or anything in our system, but it is something that's available.
Yeah, thanks. Also a reminder, feel free to email hr@beyondpay.com as you guys have questions related to COVID-19 and HR. We've opened that up for free to everybody, so feel free to use that. And the other thing I want to show here. All right, so I just wanted to pull up this page since it is important. I'm not going to spend a lot of time on this because we spent a lot of time on previous webinars. But these are the 6 reasons that an employee may be subject to the new FFCRA leave. The thing I'll say about this is it's really important that you use the earnings code set up in Beyond Pay to pay anybody the leave that is going to be reimbursed by the IRS. Right? Any other codes, if you use PTO, personal, vacation, you set up some custom code, that's fine, but we're not going to be giving credits for that through the IRS, right? So it's important to use the codes that we set up, the earnings codes that we set up in the system. Okay, fortunately, I showed that FAQ a little bit earlier on the IRS site for the FFCRA. There, as of this morning when I checked, I guess I should have checked just before this webinar, but there were no new questions, right, from last week. So if you already read it after I told you to last week, there's no new questions there. So that's a good update, unless you had a question that hasn't been clarified yet. But there's a couple things to talk about here. And the other thing here, we've created new time offs in your system. If you're using time and attendance with Beyond Pay, we've gone ahead and created new time off codes that you can use. All right, so many of you on the call use our time and attendance system. And also, this is also a perfect opportunity if you prefer to sign up for TLM. So if you just send all your employees home and you don't have any way of tracking, our time and attendance system might be a very good and easy way for you to manage that. So obviously let us know and we can help out with that. But for those of you that are already using TLM, we've already set up these codes for you to put on employees' timesheets, and they flow right through to payroll. These are the 3 new earnings codes that are set up. The important thing that I want to highlight here, it's very, 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 very important, is that you guys make sure you manage the maximum per day. Okay, currently we don't have any way of automating this in the system. So when you enter in earnings on payroll, or in time and attendance for that matter, but if you enter earnings and payroll specifically, we can calculate the 2/3 base comp rate. All right, we can calculate the maximum annual amount, and we can calculate the maximum annual amount for all the different leave codes. We cannot calculate the maximum daily total. So if you have an employee that 2/3 of their salary is more than $200 per day, you guys need to manually enter that amount in payroll when you enter these leave codes. All right, so that's really important. Now we won't let you go over the annual maximum, so the risk is the risk is that you don't end up using the full balance. You end up paying somebody too much. But again, it's just important that you pay attention to that. The other thing that I want to highlight, many of you have received emails about this, and for some of you that have not yet, you will be. For anybody that uses our time and attendance, we've gone ahead and created new full-time codes for your accrual profiles, or we've modified your existing full-time accrual profiles. And then we've also updated, created, or modified your part-time accrual profiles. However, with the law, part-time is defined as anything less than 40 hours, and full-time is defined as anything 40 or more hours per week. So it's possible some of you may have employees in our system labeled as full-time, but in reality, they only work 39 hours a week or 38 hours or 37 and a half hours or something like that. So if you do, many companies do a 7.5-hour work day. So it's 37 and a half hours per week. It's important. We're going to be sending you a spreadsheet. Whether you do this or not, we're going to be sending everybody a spreadsheet for anybody that uses time and attendance to identify who's a full-time and who's a part-time employee. All right. So please fill that out as quickly as you can and get that back to us. We tried to get that done very, very quickly. But again, if we haven't reached out to you, we will be soon. If we have reached out to you, please return that information. And again, that's 40 or more hours would be full-time, less than 40 is part-time. And this is their regular scheduled hours. You don't really have to like go back and look at, okay, well, they're supposed to work 40 hours, but they only worked 38 hours last week. And the week before that, they did 37 and a half or 39. Like, you don't need to try to figure that out. It's what they're scheduled to work. Then it's full-time. Full-time is really easy to track. Okay, so if they're full-time, they get a maximum of 80 hours or 400 hours if we're using the family leave for the 10 weeks. But for part-time, it's a little bit more complicated, and that's why we have to identify who the part-time employees are. The other piece of this is for these part-time employees, it's important that as soon as an employee tells you, hey, I'm going to need to take this COVID-19 leave, you need to go into our system. Again, this is if you're using time and attendance, all right? So if you're tracking accruals through us, you need to go in our system and enter what their hours balance should be. All right, we have a report set up that you can run to help you figure that out. But the system's not going to automatically figure out what their hours need to be. There's a formula that you need to follow. There's an estimate basically that you need to follow, and it looks at whatever their previous earnings were. All right, so it looks at what their total work hours were over the previous 6 months, the number of days that were worked during those 6 months to determine an average hours worked. All right, then we figure out what the average weekly days worked. And then we multiply that by 2 to get the average 2 weeks. So the average 2-week period. And then we multiply that by the average hours worked every day times the 2 week, how many days you work in a 2-week period. And that's what you get as your leave. Okay, so we have a report to help with this if you're using time and attendance. If you're not using our time and attendance, you're going to need to kind of look at each employee on an individual basis and figure this out based on their previous 6 months. If they were working less than 6 months, you can estimate it. All right, so if they were working the last 6 months, but you've recently changed their schedule, you have to go by what their recently changed schedule is. So there's some qualifications there. Again, that FAQ resource is a really good resource that I mentioned earlier. It goes through all the different nuances for calculating this. But I just want to make sure I'm clear here that full-time, we're able to just put 80 hours and we've put that in the system. But for part-time employees, you need to manually enter that balance each time they tell you. And like we can't just have you fill out what their balance should be now and then import it into the system either, because they might not take leave for another 2 months, and by then those numbers may have changed. So you kind of have to just leave this blank, and then when they request it, that's when you have to go into the system and enter what their balance is. Okay, the other important thing, and I know this is a repeat, but we get a lot of questions about this, and this is also continuously changing as we wait for development for some further developments from our development team. So how are these tax credits working? So when you pay an employee for this paid leave or the paid family leave, right, we are going to be calculating, and I actually have a little spreadsheet here I'm going to pull up here. Oops. All right, I think I shared this last week as well. So this is, let's make the screen a little bit bigger so we can see as much as possible. Let's make that a little bit bigger. Is that better? That's better. All right, so this is our new payroll recap and funding. Okay, so a couple changes happened last night. So I should have updated it, but I haven't updated this. So some of the labels changed slightly from what's on the spreadsheet. We've also moved this whole section to the very end of the payroll recap and funding report. So you might notice that it went into a different place if you looked at it last week versus this week. We're also only putting this section on here if it applies. So in the past, we had this here all the time for everybody, whether you used it or not, whereas now it's only going to show up if you're using it. And also the OASDI deferral, this is only going to show up if you filled out that form that I alluded to earlier. All right, so again, I'll show that again on the screen. This tax deferral agreement form. So until you fill this out, you'll no longer see that even as an option on your payroll recap and funding report. All right, so let's talk about the different credits that are available here that affect payroll. So we've got a couple of things. The FFCRA, right? So we've got, it's made up of sick leave, right? That's the, you get up to 80 hours of that if you're a full-time employee, or you get up to 80 hours of the family leave, okay? And then there's the extended family leave for up to 10 weeks, okay? So these are the codes that are available. And whenever you pay using our earnings codes, we're going to calculate what the gross wages are on that, and we're going to place them here. Okay. Then when we calculate your taxes, right, we're going to have your total tax liability, and we're just showing the federal here for purposes of the demonstration. Obviously, any state show up here too, but they're not affected by this, at least not yet. All right, and then we've got the FFCRA wage credit. So this is going to be the sum of any of the FFCRA codes. All right, so the wage credit is going to be the gross wages paid, and the government is basically allowing you to credit the amount of wages paid by whatever your federal tax liability is. You also get a credit for your Medicare wages. Okay, now there's currently a bug with this one, so we're experiencing an issue with this calculation being reduced from the federal tax liability. So it'll show this way on the payroll recap and funding, but we're working on an issue that's causing the tax credit to only include, this amount and not this. That hopefully will be resolved today, so it may not even notice it, but I just want to let you guys know in case you process the payroll today or tomorrow and notice that that calculation doesn't seem right. Okay, and then we have something called the EE retention credit. All right, and then we also have something called the OASDI tax deposit deferral, or you'll hear me call it the FICA tax deferral. All right, and we'll talk more about that in just a minute. All right, so this is only going to show up if you fill out that form. All right, we don't currently have a way of tracking the EE retention credit either. We're working on that. So I don't have an update or an ETA yet, but I was hoping I would have something for you to tell you definitively. But for now, it's recommended that you put together a spreadsheet of all like an employee ID, their name, and hours and wages that were paid to employees where they did not work, but they were paid. Okay, and we'll talk about that a little bit more in a minute. And then the FICA tax deferral. All right, so this is your employer share of Social Security. All right, the IRS is saying that you can defer making the employer share of your Social Security payment for the rest of the year, and then you can pay that back over 2 years during 2021 and 2022. And again, there's a form that you can fill out to take advantage of that. All right, now I'll try to remember, or Chris will try to remember to repeat this, but if you are going to do the tax deferral, you need to make sure that you have not received funds for the PPP loan. All right, so if you've applied for the PPP loan, and actually, Chris, maybe this is a good time to talk about that
Yep.
updated FAQ that you mentioned.
Yep. It actually has been updated and clarified quite a bit according to the IRS, and I was somewhat surprised to read it. What they're saying is that you can do the deferral up until the point that the PPP loan is forgiven. So even if you receive the PPP loan, you could still continue the deferral until you apply for forgiveness and receive a letter from the bank that it's being forgiven. Then you have to cease deferring, and you don't have to pay it back until the original 2021 and 2022 period, according to the rules. So you still get the benefit of that all the way up into forgiveness. And it doesn't say this expressly, but if you read the way it's written in that IRS Q&A, it implies pretty strongly that if you don't get forgiveness on the PPP, you can continue to do the deferral as well. So the interpretation seems to be even more favorable than we originally thought.
Thanks. All right, so one more slide. So there are a couple items. This is all under the CARES Act, okay? So I guess technically the first one is not. The rest of them are all under the CARES Act. So we've talked a lot about the FFCRA. I think everybody has at least a decent handle on that. And again, if you have questions, please post them in the Q&A button, and we'll get to them at the end. But the FFCRA, I think we have a pretty good handle on. Again, I mentioned that little issue with the Medicare calculating. Right now, you're going to get that credit back with your 941, but that should be fixed in the next, hopefully in the next day or two. That should be fixed very soon. But for these other items, you got the 2020 FICA tax deferral. All right, that's section 2302 of the CARES Act. You've got the PPP loans. You've got some SBA debt relief. You've got the SBA economic disaster loans and grants. And we're not going to go into those ones specifically unless anybody has specific questions. First off, it's probably something, if you don't, you should talk with your accountant or tax advisor. It gets into something that goes a lot beyond just payroll. But again, we've been getting lots of questions on them. We have been researching. So if you have questions, feel free to ask. But ultimately, you're going to want to talk to your accountant or tax advisor about the PPP loans, the debt relief, and the economic disaster loans. There is, though, we wanted to mention, and Chris just clarified, that you are able to do the FICA tax deferral even if you've applied for the PPP loan. So there's some nuance to that now. I mean, ultimately, you can't do the FICA tax deferral and the PPP loan, but there's this weird exception in there that kind of makes it seem like, that you can. So I probably just confused that more than that was not necessary, because Chris just gave a better explanation. But the point is, if you want to take advantage of that FICA tax deferral, okay, you need to fill out that form on our website. All right, it's right here on our FAQ page. You need to fill out this form, and then we'll work on setting that up. We've been getting a lot of questions, and maybe even somebody asked it here. Can you do the tax deferral retroactively? So this has been a real common question, and I don't know the answer yet. So from the way the law is written, it seems like you could. It's just that practically speaking, I don't know. We don't really know of any good way of getting the money back that you've already paid to the IRS. So, we thought maybe we could do a 941X and make it seem like the deposits were overpaid and then get a refund due, but there's not really a place to put that. So it's not really clear. We haven't really got guidance from it. I thought maybe it would go on the Form 7200, which again, we have a copy of that on our website as well, Form 7200. It looks like this. All right, so I thought maybe it would be on here. So like some kind of thing, hey, your deferral that you never took, maybe we have a way to put that here. But again, there's no place for that. You got the employee retention credit, you got the qualified sick leave, you got the qualified family leave, but there's nothing in there for the tax deferral. So as of right now, the only option that we see is for you to defer your FICA employer paid taxes going forward on a go forward basis. But stay tuned. There maybe the IRS will release something that'll let us go back retroactively and get a little bit more. But again, if you want to take advantage of that, you need to fill out this form and upload it to feedback by logging into into Workforce Ready and clicking on the feedback button. So the tax deferral is not yet built out in our system and working. Okay, so if you fill that out, it's a manual process for us. We are doing it for you, but just know that it's a manual process and the reports might not reflect everything completely properly. All right, so it's getting closer, and we're actually handling it pretty darn well, but it's just not 100% yet. But we can do it though. So you fill out that form on our website, and we'll start doing the employee deferral. Just make sure you talk to your accountant and just tee off and make sure that you apply for the tax deferral. Okay, so if you did any of these other kinds of debt relief and economic disaster loan, like there are exceptions to when you can do it, and it's something you really need to talk to your accountant or tax advisor about to be doing that tax deferral. All right, the other piece is the employee. Oh, you know what? Let's talk about I meant to talk about the PPP. How do I go to the PPP? So on the PPP, lots and lots of questions around this. So if you have specific questions, maybe we can answer them on this call. But I just wanted to highlight, we do have a report available in the system to help with this. All right, so basically the payroll distribution report, there's a payroll distribution summary report. And you just go in and pull in gross wages. And we even have a little instruction booklet on how to do it, or you can reach out to our team for help generating the report. But this is many of you have already done this and completed this, but if you're planning on doing the PPP program, just note that there's a very good chance that we might not be tracking your health insurance. We may also not be tracking your sick leave, family leave, severance. Not everybody tracks everything in our system for some of these items. So you can't necessarily just get everything from our system. You might need to do some digging and some legwork to identify some of these items. But we are here to help with it. And again, most of you have already completed these forms, so it might not even be an issue anymore. All right, employee retention credit. So this is section 2301 of the CARES Act. Okay, and I provided a link here, and this slide is also available on our website. So if you come to our FAQ page and scroll down a little bit, all right, we have our webinar, our next webinar. We're on the current one right here. View the slide deck. All right, so you can get a copy of this slide deck, and I've been updating this as we go as well. So as information's been updated and changing, I have been updating this slide deck as we go. So the employee retention credit, this is something that we have not yet built out in the system. We have no way of tracking this currently in Beyond Pay. I don't have an ETA of when it will be available. It is complex. So I don't know what the end result. I don't really even have a lot of guidance on what to do other than start tracking it right now in Excel. All right, so put together an Excel or Google Sheet and be tracking, have employee ID in a column so that we could ultimately import data if and when it ever comes to that. But just start tracking employee ID, maybe check date, hours, and wages of who was paid. Now this only applies, I say only, nothing simple, but if you have less than 100 employees, okay, the credit is based on wages paid to all employees, regardless if they worked or not. All right. It's also worth mentioning that you can't do the employee retention credit and the PPP loan. Or some of the other SBA options that were in the CARES Act. So the employee retention credit is probably best to use if you don't do the PPP loan. Again, talk to your accountant or tax advisor. That's kind of my opinion, but everybody's situation might be unique. But the credit is based on wages paid to all employees, right? And there's a formula, there's a calculation for how that ends up calculating. Okay, if you have more than 100 employees, it only applies to employees that were paid who did not work. Okay, so if you were an employer that paid your employees even though they weren't working, that's who this credit applies to. All right, so again, staying pretty vague, I put a link for more details on exactly how this is calculated and more details there. We could spend a whole webinar just talking about the employee retention credit technically. But just be aware that if this applies to you, we don't yet have a way of tracking this in Beyond Pay, but there are ways of reducing your federal tax liability. Okay, so if you can start gathering the data, once you have the data for the amounts that these employees were paid, we can manually calculate the employee retention credit, and we can manually reduce your tax liabilities going on a go-forward basis. Also, once you do enter this information, let's say you did pay your federal tax deposit and everything, this is included on Form 7200, right? So Form 7200, you can file to get your FFCRA credit, but you can also get the employee retention credit. So the 7200 is a way for you to retroactively basically get your money back, all right, for any employee retention credits made. I know this is complicated. I apologize. There's all these different rules, FFCRA, employee retention, FICA tax deferral, the SBA loans, economic disaster recovery loans, and grants. But hopefully this makes sense. Bottom line, okay, bottom line is make sure you check out our FAQ page, okay? If you have extra credits for FFCRA, make sure you fill this form out, and then upload it to feedback. If you want to do the tax deferral, click here and upload to feedback. If you want to take advantage of the employee retention credit, you can fill out Form 7200, but first you've got to gather all the data, and it's data that Beyond Pay can't get for you. So you're going to need to identify the hours and wages by employee that you paid when that employee was not working, right? If you're over 100 employees. If you're less than 100 employees, it's a little bit more straightforward of a calc, but a little bit less benefit. All right. All right, that's all I had. Let me see if I added anything in here. Nope. All right, so that's all I had for today. So we're going to go through a couple questions. We actually don't have as many questions. So if anybody has questions you'd like to go through, please post them now. Otherwise, we'll be finishing up here shortly. And actually, before we go to the questions, Jason, there was one topic that you wanted to bring up around COVID-19 FFCRA leave codes and how that relates to holiday. Did you want to go through that?
Yeah, so we've been getting a lot of questions on holiday. I guess there was a recent holiday either last week, Good Friday, or Easter Monday. So the guidance from Beyond Pay is to continue paying the holiday if that is your normal practice of when employees are on disability or when they're on any other type of leave. And if you do pay that holiday, you're not gonna code it with a COVID-19 pay code. You're gonna just call it holiday pay. And then what essentially that does is it throws another day or 8 hours onto the back end of the time that the employee's out, or it gives them an extra 8 hours if you pay that holiday. So hopefully that makes sense.
And that holiday would not be reimbursed either.
Correct.
All right, so
hopefully that makes sense. If there's any questions on that, please feel free to post them or email us.
Thanks. All right, so a couple questions here. So for the purpose of the accrual balance, we only have one part-time employee who's scheduled to work 32 hours each week. However, the hours can vary slightly. Must we use the calculation, or can we just go with the standard hours that the employee is supposed to work? Good question. So if they're scheduled to work 32 hours and they've been scheduled to work 32 hours for the past 6 months, then you need to do the calculation. Okay. If they used to be working 40 hours and then for a little bit they were scheduled to work 10 hours a week, and then for a little bit 16, and now it's 32, then you can do a more of an estimate of what you think they would have worked the next 2 weeks. And anything further than that, there's some guidance on that FAQ page with the IRS. But technically speaking, you probably should do the calculation just to make sure, in case it ended up being a lot different from 32. But there are some stipulations in there where you could just estimate and just go with 32. So I know I was a little bit ambiguous with that, but hopefully that gives you enough to go on. Another question said health insurance premiums should be included in the tax credit. Yeah, good question. So let me pull up this spreadsheet again. All right, so when we calculate the FFCRA, all right, we take the gross wages, we calculate Medicare, and then we can also take the health care credit. So for health insurance that was paid, this is a little tricky because how do we know that the health insurance was paid on the FFCRA versus the regular scheduled payroll? What if you take FFCRA in the middle of a pay period? So what if you had an employer calculation of $700 for employee health insurance, and it was deducted on the first payroll of the month, but you ended up but the employee only had 1 day of FFCRA leave in that pay period. How do we calculate what this health credit should be? So we don't have any clarification on that yet. It's more straightforward once they're on leave. So if they're taking that 10 weeks of extended leave, it's a little bit more straightforward because you can kind of line up the pay periods and figure out, okay, what's the health insurance premiums going to be? So for now, we don't really have a good way of tracking that in the system yet. So for now, this is going to be something that we're going to be updating with the 941 that you'll get a credit for, or it can be manually calculated. So if you have a lot of people out on leave taking advantage of this credit, we can manually enter this. But for now, we don't have a good way of identifying the FFCRA codes. Now, as a first step, if you're not already tracking benefit plans in our system, okay, so if you're not already tracking benefit plans in our system, now is the time to start doing that so that we can automate this once it's ready. Many of you do track benefit plans in Beyond Pay, but many of you do not. So as a first step, it's probably a good idea to start tracking, okay, Susie has employee-only coverage, Mary has family coverage, Tom has employee plus spouse, etc., with all your rates applying. Also, this is probably a good time just to repeat what Chris said earlier. If you happen to be in New Jersey, they passed a law that there's a minimum of a 60-day grace period for health insurance and dental, and a 90-day grace period for other types of insurance. So from a cash flow standpoint, that could potentially help out a little bit too. Doesn't really affect payroll, but something worth mentioning there. And you should only be tracking, it's not to say you can't track the employee portions, but you only get reimbursed for employer paid. So anything that the employee paid, you don't get any credits for that. But for employer paid, you potentially can get some credits. We just don't have any guidance on how to calculate those credits yet. So again, it's very clear if you're doing the extended leave and they haven't worked at all during that period. But how do you calculate what the health insurance should be if it's in the middle of a pay period? We don't really have any guidance for that to know how to calculate that properly. So the system isn't automating that quite yet. Oh, actually, next question was pretty much the same question. So what if you're a biweekly payroll and you're doing half of the monthly period? How do you calculate this? Again, we don't have any guidance yet. So I haven't seen anything from the IRS. I've seen some speculation articles. You know, if you really, really needed and wanted to take the credit right away, I would just come up with what you think is the right answer and then manually track that, and then we can manually enter that. But for now, we don't really have any specific guidance on how the IRS wants us to report and calculate the amounts of the healthcare credit. Again, unless it's the extended leave where they're definitely not working during that time, then it's easy. It's also only medical health insurance. It does not apply to vision, dental, any other benefit plans. Another question, retirement contributions. Oh, just went away. 1 second. For retirement plan contributions, pre-tax and earnings. Yes. So we've talked to several companies that have that have retirement plans. It's on a case-by-case basis. All right. So you'll have to talk with your TPA, whoever wrote the policy. You can read that nice what's it called, the SPD, the big giant 60-page document that you have to give to all your employees that are on that if you have a retirement plan. So just on a case-by-case basis, you'll have to determine whether the retirement contributions can continue or not. It just depends on a case-by-case basis. A deadline, is there a deadline to apply for the PPP loan? Chris, do you know the answer to that off the top of your head? There is a deadline, but I don't know what it is.
It's June 30th.
June 30th, okay. Yeah, so you got till June 30th to apply. We have had several companies that applied for the loan early that did get the PPP loan, all right? So we have seen people getting the PPP loan. I know there's still a lot of question of whether everybody's going to get it or not. I imagine the funding's going to run out quickly, but yeah, you have until June 30th, but I'd recommend doing it as quickly as possible if you haven't already, if it applies for you. Are per diem employees eligible for FFCRA leave? What if they've worked enough hours but are still coded as per diem in the system? Does not show. Yeah, so for per diem employees, as long as we're talking about employees and not contractors. So there's some specific exclusions for 1099 contractors for contract work. For 1099 people, they cannot get these leave codes. You can't pay them. You can't somehow pay 1099 people for the leave. But for per diem employees, they would just be treated as hourly employees. So you'd have to go back and do the average hours calculation unless their situation changed recently. So as far as we're aware, per diem, and Jason, if you had anything to add there, but per diem and part-time, there's no distinction between per diem and part-time as far as we're aware. And it's just a best guess estimate on how to calculate what the hours are. And again, you can use that 6-month calculation. All right. Barb, you asked a question. You did payroll this week, and on my recap, I did not have an amount for regular earnings. That is on your sheet, but my FSCRA was. Is this a mistake on the recap? Yeah, I'd say get in touch with your CSR and talk that through. I can't really think on how regular wouldn't show up on a payroll recap and funding, but the FSCRA did, unless you didn't have any regular wages. But yeah, I don't know how to answer that without. So I create a case for that one, and we'll have to follow up with you. Where would we enter the healthcare credit if we manually calculate it? Right now, there's nowhere to enter it in our system for calculating the credit. So here, let me actually log into our system for a second here. Oh, I got logged out. Let's jump back in. Give me just a moment as I log in. Jump into a demo account. All right, so I'm just in a demo account here. So one of the things that you're able to do for your employees, so let me go to an employee here. And I'll just pick on Ralph here. You have the ability to enter benefit plans for your employees. Okay, so here's my benefit plans for Ralph. He's got employee-only dental, he's got employee-only medical, and he's got employee-only vision. All right, so if we look at our medical plan, the system is tracking employee-only coverage, and here's the pricing. All right, it's $450. The employer pays 350 of it, so the employee pays the other 100, and then we automatically calculate the deduction based on that. No, I'm zoomed way in here, so this is probably hard to see. All right, so what we can do is we can set up these medical plans and enter in your pricing. So reach out to your broker and get all your pricing information on each section. So you got employee only. Let's grab a couple of these quick and just kind of look at them. All right, so we have all your different, this one's actually based on the age of employee, so it's a little bit more complicated because the rates change based on the age. So, but we basically enter in all this information and we track it, and then when you process your payroll, we automatically calculate what the deduction needs to be, and it's made up of a portion of the employee and the employer. Oh, just went a little bit too far. All right, so we calculate the employee deduction and the employer deduction. All right, and then once we get some guidance, we will be tracking when you use those FFCRA codes. We can take the employer deductions, not the employee deductions, but the employer deductions, and we can incorporate them into this line item right here for the healthcare credit. Okay, so I would recommend starting to track benefit plans in the system, or if you really don't want to track benefit plans, at least go to a deduction. And if you don't have a deduction set up, you'll need to reach out to support for some help with that. But if I go to my payroll tab here and go to my scheduled deductions, all right, now again, I'm tied to benefit plans, so this will look a little bit different for you. But if we go to our deductions, you could also just manually enter in what the deductions are. All right, so this would look a little bit different if you're not using benefit plans. But you can start tracking what's the employee deduction, which you're probably already doing. And then if you're not already tracking the employer deduction, you can enter that in as well. You may want to make that every scheduled pay and split it out over multiple pay periods, or you might want to make that on the first of the month. Right? And again, your CSR can help you out with this too. So ultimately, this is how we're going to be tracking it. In the meantime, for tracking it manually, it's literally going to end up being a spreadsheet. Okay, we'll definitely be incorporating this at the end of the quarter to make sure you get the most credit you can by the end of the quarter. But you can do this right away. You're just going to need to put together a spreadsheet, give that to your CSR, and then we'll need to work out a way of getting that credit updated manually. All right, so not ideal, but unfortunately, this is just one of those areas where there's a law that just doesn't have any clarity on how to do something. So there's just not an easy way to do that right now. All right, so that's probably a little bit, maybe I probably over-answered that just a little bit, but hopefully I answered the question. Let's see, what do we got here? All right, so computer got disconnected while you were going over the hours calculations. Do you mind repeating what you just said? Not sure which hours calculations. Oh, you know what? You're probably talking about. Let's see. Probably talking about. My guess is you're talking about this one. So feel free to grab the recording. We will post the recording shortly. Also, I think I mentioned this last week too, but just to repeat it here specifically, this is the calculation for calculating part-time employees' balances. All right, so you need to figure out what the 2-week average is for the average number of hours. And to do that, we take over the last 6 months the total hours that they worked, divided by the number of days worked. And there's a system report already in your account if you use TLM. So Jennifer, you asked this question, so you guys should definitely have this report in the system already that you can run for your employees. So basically, when the employee says, hey, I need this leave, you can run this report to give you the balance, and then you can manually enter that balance in their accrual part-time bucket, which we're actively working on. All right. Now remember, you got to tell us who's full-time and who's part-time. So if we haven't asked you that for that yet, it's coming. But once you do that, you'll be able to enter in the balance manually from this report whenever somebody requests time off. So it's a little tedious, I admit, but unfortunately, just the way this calculates, there's just no other way around it. All right, I have somebody saying that you can include dental and vision expenses in the FFCRA credit. So that's news to me if that's in there. So I'll have to take a look at that. But I guess it's possible maybe we can include other types of benefits in there, but I haven't heard that yet. Thankfully, we have no employees out on COVID sick leave yet. Should we still do a spreadsheet with our employer-funded health insurance? By the way, we pay 100% of employees' health insurance premiums and 50% of employees' children coverage. So I would recommend tracking it in our system. I just think it saves everybody energy and effort. It's just nice to be able to run reports and see what the health insurance premiums are in our system. If you've got more than a certain number of employees on your W-2s, you actually have to report it anyway at the end of the year. So why not just track it in our system? So if you're not already tracking it in our system, I would recommend tracking it in our system. I would say there's no reason to create a spreadsheet and track it in the meantime. That doesn't seem necessary to me. It doesn't hurt anything, but I can't think of a reason that would really be helpful. But I could see it being helpful to start tracking it in our system on a go-forward basis so that you can calculate this automatically in the future. So yeah, very welcome. All right, with that, let me see if there's anything in chat that we should. Nope, nothing there. I was just reading the chat there. Well, thank you very much, everybody. Thank you for your attention. We'll close this out for today. Again, we will post a copy of this recording. There's a copy of the slide deck. Please check out the FAQ. Please use hrbeyondpay.com. Just reach out to your CSR and also be patient with us as we respond. Again, this is constantly changing. We'll continue to provide you guys updates. I'm really hoping to see more on the how to track the health insurance, how to track the employee retention credit, and how to track the deferrals a little bit better and more efficiently. So again, thank you, everybody. Have a great rest of the day.